A tax targeting grandmas, a tax robbing your kids of inheritance, a tax that will force hard-working Aussies to sell their farm. So with all of these headlines, this proposed change to the superannuation tax must be a massive, disastrous deal, right? Well, not really. Here's what's actually going on. So in Australia, we store our retirement money in super funds, which invest that money and help it grow over time. Now, the amount you earn from that investment is taxed each year, but at a way discounted rate compared to most regular income tax, just 15%. And this discount overwhelmingly benefits wealthy people. In fact, the richest 10% of Australians get more than $20 billion a year in tax breaks from it. That's despite these people already having much more in their super than they need to retire comfortably and avoid being reliant on a government pension, which, was the whole point of that discounted tax rate in the first place. Now, the change the Albanese government is proposing basically draws a line at $3 million in your super. Everything below that line stays exactly the same, but the earnings you make off the proportion of your super that's above $3 million will have an extra 15% tax added on top of the regular one, so 30% in total. For context, $3 million is 715% more than the average person will have in their super when they retire. Currently, this change would only affect 80,000 Australians. So why is it controversial? Well, the argument is because you can't touch your super until you retire, you have to find the money now to pay tax on profits that you might not actually see for years or even decades. So if you have a lot in your super, but not much in your actual bank account, this bit of extra tax could land you in a sticky situation. But given we are talking about the richest 0.05% of Aussies, the dramatics over this law change do seem a little overblown. That being said, the government isn't currently planning to raise that $3 million threshold in line with inflation. So slowly, this will start affecting more and more people. According to an economist from the AMP, a 22-year-old today who earns average wages for the rest of their life will cross that $3 million threshold by the time they retire. So the bill is currently moving through Parliament, but ultimately, if it does pass, is this super tax change a super big deal? Right now? Nah. If the bill does remain unchanged for the next 40 years, then yeah, maybe.